All right, good morning. A little late start here, but no problem. Okay, so where we go from here? Well, we have a current pattern, and that brings some ideas about what the next pattern will be. So I'm glad a little bit of selling here at the open. We'll see how far it goes as always. Starting with YM here, and no big deal so far, even though we see down almost 300 points, right? So we look at a minder down 300 points. Oh my goodness. Well, it went up huge, from on the prior bar and up 2 bars. And now we have what we call our method, MTS, Master Trader Technical Strategies, our factory work, and then we like to call them thought building lessons. Right? That's what we're going to have more thought building lessons in MT Live today. So make sure you join us there. Anyway, one of the thought building lessons when we look at price movement is that 2 wide range bars are a powerful signal suggesting prices can continue to go higher. Doesn't mean they can go higher right now, even though they could. Right? That's just a thought. Right? One thought, one concept is not a trading strategy. So what happens now? Well, we could see a continuation pattern, which would mean a correction day to day, where the prices move down. It could be a couple of days, a corrective type of pattern. And it wouldn't be a 1, 2, 3 per se, because it's 2 bars up, where a 1, 2, 3 is 1 bar up, a consolidation day and a continuation. But the concept could be the same, is that if you compress this, right? Now think about this. If I was to compress this chart into a 2-day chart instead of a 1-day chart, you'd have one monster bar. Right? One big wide range bar, power bar. Now, other concept, power bars create voids. And that's exactly what we have here on the hourly chart, one big monster void. Now, we've got these little areas of overlapping bars, some congestion there. Those would be our support points. And you can apply what I'm saying here to whatever else you're looking at. This is a 24-hour chart, but the concepts are universal. Any stock, whatever, some overlapping opens and closes, that's where you're going to have some consolidation in your smaller time frames. So this could correct back down into the void and maybe come all the way down over a few days and form a W pattern, which could take out the lows. I'm not predicting that. I'm just providing thoughts as to what might happen, patterns, historical patterns. Now, what you would experience, not only the pattern, but psychologically, is like, oh my God, another bear market rally that has failed. And while that could happen and this could go lower, we have to take the current information and the thoughts that it produced and put it in the context of, what occurs and where support is and resistance is. So, for example, you see a wide range bar like that after a drop and a rally into these moving averages, it's like that sucker's going lower, right? So this says, hey, this is the process of making a bottom. It's not the bottom yet. It's the process of making a bottom. This was a momentum move down. That's a strong move up. We've got a really nice looking weekly bar, but we've got several days here. And you see the momentum move here. So this is the start of making a bottom, and that bottom could certainly result in a lower low. Right? Even could come down into here. Those of you that have seen the videos on the weekend, we've gone over monthly charts, those monthly charts are not bullish and supportive, especially even the way this came down on the weekly, supportive of this coming down and getting a slowing momentum down here. Okay, so continuation pattern, could it go higher? Yeah, we have yet to see that. if that's going to happen. There's resistance up here, but it stopped right where we had our line in the sand yesterday. Got a little bit above it. It went a little further than I thought it would. I communicated that at the open and especially in the green room. But hey, none of us know exactly what's going to happen every single day, to the extent of what might even happen over the course of the next hour or two. So it was really strong yesterday. Internals were really strong. And that is supportive of these big bars that, those internals were as strong as they were. So today might be a choppy day, which is fine as it consolidates the gains. Let's look at the S&Ps here. And we see the same wide range bars coming up into this resistance area. All right, big bull. I had this marked yesterday, and now we've got another one into the declining 20. These overlapping bars right here, it's pulling back. You got the same congestion areas. You got the same weekly charts. And to different degrees, we see various patterns that look similar, not the same exactly. And that's what brings in the idea of relative strength and relative weakness. And so we're looking at the Qs, which are down here, right, 150 points or so, and the same pattern coming up here, not up to the 20. So a little relative weakness, but a good showing. And this led the way down. It's already down here near that 2000 low. So should we see the S&Ps, the spiders, SPX come down and maybe come down more, the ideal scenario would be for tech. And we saw the semiconductors showing some relative strength this week. The ideal scenario would be if the S&Ps go down and make lower lows, we're going to see some relative strength in tech, even if it breaks below here. All right, so we're looking to put together the pieces of the bottoming puzzle, right? And we'll see how that unfolds into this month. So for today, this made a hell of a nice move. It's up at some resistance. We'll see how it deals with that resistance. It's correcting. You can see things are starting to pull back a little bit more here as I am speaking. And we'll see how far they go. Some little tail right there. It's not marked as a pivot, but I know it's a pivot in a smaller time frame because it's a tail that is poking down under a few bars lows. And you can see right there, right? There's your little support area right there. Yeah. That's what I mean, Santini. I'm looking at this 2000 low here, and the same thing on the S&Ps. Absolutely. Whereas this is already down there. This was showing relative weakness. It's down to support. And so if the bias is correct of a bottoming process beginning, this could break the lows, but begin to show some relative strength. So look, we have a bias, an opinion, a scenario. Then we see how it plays out with current information. Right? Does the rhyme begin to solidify, or is it like, that's something new that puts a hole in that idea? Okay, so let's see where they're gapping. Spiders, right? This was the gap up day, right? Yesterday was like, wow, that capped up pretty far. And I was like, how that won't get too much further. And so the idea with the credit spreads, if you remember, was like, look, that's strong. If we're going to do something, we want to do it above SPX, above 3,800, right? So it went up there. I think I told you 38.15 yesterday, wind up being actually, what personally my own did, I was 38.30 because it was so strong that I waited, and then it kind of peaked out, and I thought, okay, 38.30, that's going to be a no-brainer. And the 36.40 I said was good right away, and that was a no-brainer. So when I say no-brainer, that doesn't really mean you could do it all in like an idiot with no brain. It just means it's a high probability. None of us know for real absolutely what's going to happen. All right, so SPX. And let me just check that gap. So it's gapping. I don't know that is that tail. That tail ain't right. That's a bad tick on SPY. That never came down there. So the low there was, it held the open, right? It held the open, which is good. So yesterday's low is significant support. And this right now is gapping down to yesterday's low. Yes, Rohat. You're meaning futures, yes. Yes. So this is gapping down near the low, right there. There's yesterday's low right there. So that's a bearish gap we're starting out with. So sometimes you look at the futures because it's 24 hours, like that don't look so bad. And that's why I look at SPY every day. And it's like, okay, what is how does this look as relative to a gap and what happened yesterday? And that's a bearish gap, saying, hey, that's possible to go down and fill that gap. Ideally, it won't, right? Maybe this little support area right here, because, well, I don't know what's going to happen, but look, I'm saying ideal, but it could come down there and fill that gap and we get a nasty red bar. And that could lead us to the possibility of a W type of a pattern, right? So we're in a downtrend. Prices made a nice move. Maybe they could have went higher today. Now they don't look like that's going to happen unless the buyers show up in big force on this gap down. And at that point, what would this be if that was to happen, assuming that it opens down here, right? There's still 15 minutes to go and it rallies back here today. That's going to be a messy pattern to have another green bar here. It would be bullish. But if this little shallow retracement and it's a red bar down, one or two things I think has to happen. Either a W or it's going to be a continuation pattern lower, because the deeper this goes and the more, right, this current bar turns into a topping tail bar, that could be a continuation pattern lower. So this is not an easy market as far as day to day, other than if you were just established within this downtrend and holding, and you saw this, you're like, wow, this looks like maybe I need to cover, but now this gap down puts that in question. Mike saying no reason for buyers to show up. Well, Mike, I would agree with you, but sometimes, those buyers or sellers, they just don't listen to me and you, and they do what the hell they're going to do. I hear you saying the Federal Reserve is the only buyer. Well, these institutions have opinions, and they flip their opinions like what we used to call Sos bandits back in the 90s. All right, let's continue here. So gap down, which means areas above this high today for SPX should be a no-brainer. That's an assumption. So up above 3,800, if we can get something like that. What did I do with that? Oh, here we go, option chain. Nothing. Is this is not updating. They zeroed it out. Let me look over here. And I didn't look a little while ago. They zeroed it out. I don't know if Jacob can help me. Look, above 3,800. So even what you'd have to look and see what the premiums are. They'll fill this in shortly, but look, you want to be above 3,800 today, and that's gapping down to here. You definitely got to be below the gap fill area, and so it's going down right this morning. So what you want to do is do the top side early if there's premium, and then on the downside let it drop, and then see how far away we can get, which could be again 3640 or 50, somewhere down here. Bro, take a trial to the green room, scalp time frame. I got limited time here for explaining strategies, but look, for futures, for anything intraday, I start with a 5-minute chart, and I know what's going on higher time frames, whether that's the 15 hourly, daily, of course. And then depending on how fast things are moving, I will certainly go down to a 1-minute chart. 5-minute intraday is my primary time frame for intraday. But these ranges have gotten big. So sometimes the 5-minute doesn't, things are moving, it doesn't lend itself for decent entry points unless, you wait, and then the move could be over. So if I see that there's a void and prices are moving and whatever, I can go down to a smaller time frame to look for the same kind of patterns. Okay. Bitcoin down today. It's just been a grinder. I don't know. It looks like it's making a bottom, but I don't think it's totally out of the woods yet. If I looked at the Russell here, same big, huge bars. And, yesterday, one of the surprises was that the 3-month popped up like this, which is whatever these Fed guys are saying. And I haven't listened to them, but it sure would, by the look of this chart, it was like they're committed to doing that 3/4. And one of the things we talked about, this thing's pulling back. Buyers are going to show up. That's your 30-year. Let me just drag that up there. I really wanted the 10-year, but pulling back to the 20. Market's not going to like that. The other thing we said for a bias as to a turn in the market was, hey, this is pulling back to support. It's in an uptrend. Keep an eye on the dollar. It's gapping up. Market's going down. That's the way it is. That's the relationship now. And at some point, the market, one of the things I mentioned in the green room, because Dan and I are always trying to share our years of experience. And one of the things I mentioned was that at some point, the markets participants aren't going to give a damn about the dollar or interest rates, meaning those intermarket relationships will disconnect. As tight as they are now, I've seen it before, and they will disconnect again. I think that's it for me, Dan. Take it over. I mean, we usually look at silver and oil and all that, but this is up at resistance. There's going to be sellers there, and silver's backing off because the dollar's popping back up. So, things today could be one of those frog in a blender patterns. So,
but wait, you say the dollar popping up? I see UUP down.
Yeah, you got to look at the overnight, the pre-market, and you can see it's up. And what did I? Yeah, it's right here. Look at the 5-minute chart. See, this gray area means pre-market, and you see it's gapping above that bar's high.
All right, yeah, I gotta fix my pre-market then. All right, cool.
Okay.
Today, MT Live, we're talking about trading news. Great subject. Using our technical approach, we'll teach you when to go with the news, when to fade it, when to trade related things. So, a great subject as always. We've been doing a great job. We nailed the turn. We were very aggressive bullish the last 2 days. We were closing some things in the strength yesterday. I closed half my stuff, and we're in trail mode on half. And I don't have a single alarm going off. So that means even if we get stopped out, it's at a gain. So all opens are fine. Just ask me if you have any questions on them. Lily here, we did a half lot yesterday, the back half today over yesterday's high. That's a nice little buy setup after a pro gap, 180 reversal. That looks great. Healy. This was an earning stock that we were looking at yesterday, and it is getting killed. So my bias is to sell a put using our checklist. So that means I got to see a stabilization, see if they're tight spreads. And I remember yesterday they were really wide, so I didn't touch this. But I think we were actually looking at the 80s. So I'm glad we stayed away from that one. I actually did 2 earnings trades myself. Lima whiskey. Hey, that's actually looks pretty good. Maybe I don't like the overlapping bars actually, but 30-minute high looks good. Now let me put that here. I have an alarm on Lily. Lima whiskey. So that obviously I'm going to have a beautiful profit at the open. RPM. I said it was a judgment call. I think I was hoping there'd be more juice at 80, but if you did that one, that's working. And let's see, I also did this one, SGH. I shorted the 15s. Gapping under yesterday's low, but hopefully that's an example of gapping against me. It doesn't matter. Rahul asking about Merck over yesterday's high. Yeah, definitely. Yeah, I like it. Why didn't I just take this huge? Merck. I was watching. All right, so that's Lilly. BMY. That's the one that was in last weekend's letter. If it could have got over last week's high, but it's still a watch. This one's a tad stronger. Just looking at the moving average alignment, whereas the other one's more of a bottoming pattern. Talking about bottoming pattern, in coaching last night, we just spent a lot of time of repetition of applying our checklist for trading options, whether shorting options or directional. And we went through this one, and this is it's a no-brainer put spread. We'll do the 135 $10 wide over yesterday's high. So that looks great. Oh, thanks, Rob. NVIDIA here over yesterday's high put spread, CHRW. We're already short naked 90 puts, but I like the options are too illiquid for directional. Thanks, Rocco. But this one I like as a directional over yesterday's high. I have an alarm set already. Oh, nice. That would be, yeah. I can't tell where it's gapping. But that's a beautiful 15-minute chart. So if it does not gap down too much, for example, just eyeballing it, let's say it gaps down to 66.50 and then chop around for 30 minutes, then definitely you can buy that over the high. So yeah, that's a watch. Or ideally, I would like to get a 1, 2, 3, because then the math behind that. Then I have 26 bars of 15-minute candlesticks that are in the upper third. All right, what else I got here? VLNC, I just saw pop in pre-market. Now it's getting smacked right down again. Twitter, the saga with Musk. I told you that whole saga with him. I thought legally he was going to totally lose and he would end up either buying it or at a discount or paying a big penalty, because I thought he would lose. And my guess was right. And then, so like trading the news, right? I know it has nothing direct with, oh, this is going to affect this company. But there has to be some consideration, I think. If this guy's going to get so distracted now with buying a Twitter, is he going to be taking the eye off the ball? I mean, there's only 24 hours in a day. And look how weak Tesla's been. We actually had this in the weekend letter as a call spread, and the gap down on Monday messed it up. But that's definitely the weakest thing. Netflix, I still like this over yesterday's high, both as a directional, because I got 4 inside bars in a trading range and an uptrend. So I got an alarm at 244 on that. Mick, yeah. That pattern a little bit reminds me of Lennar. Look at Lennar here, kind of just chopping around. Talking about Lennar, I read in the journal today that some housing companies said that they're dumping big inventories of new homes to whoever will buy them because they can't sell them. I mean, we all know housing's slowing down. I mean, it's a mathematical fact, number one. it went up 30 something percent in a year or two. And number two, it's much more expensive for a mortgage. So it's no kidding why sales are going to go down. Kid, and that Jeremy Siegel, man, he talks a lot on CNBC, and he's been hating the Fed. He thinks they're going to over tighten, which we all know is history. But he's like, they aren't looking at the data where the economy's already damaged so much. All right, kid here, I don't know what's going on here, but we'll come back to it. Look at Jets. Now that's not a textbook W bottom, just the curvature is not wide enough, but it's a breakdown failure with a bottoming tail after a retest and a price void and then a bullish gap. So that actually was a very bullish setup yesterday. I kind of missed it myself, but now we got a 50% gap down into it. All right, McKesson, yeah. So McKesson would be a no-brainer. Put spread for starters. Go through the checklist. Check, liquidity. I'll do it right now because that's a nice pattern for that. MCK. I guess the eyeball in 340s. And the spreads are ludicrous. 30 cents by 320. So ludicrous spreads. My Lima whiskey puts that I sold for 70 cents yesterday. I'm bidding 10 to get out. That bid is me. And they're 10 by 25. So that's working well. So the SGH, that's against me. It's against me, but I still have an open profit. And that's exactly what I predicted, because the gap down's not as big as the volatility contraction. So I'm just going to take my money and not deal with it. It's off to the next trade. All right, out. All right, so it went against me and I'm out. I'm out at a profit. Look at that. Beautiful, beautiful management of that.